Good evening and welcome to GrainTV. Today is October 7th and this is the weekly wrap-up. Brock, we had the unemployment rates come out today, 9.1%, really unable to make any sort of significant gain to bring that down. It was stronger than expected, but it included some strikers that moved back into the labor force. Not really a big win there. Fitch downgraded Italy and Spain. This is coming right before a summit on Sunday for them to address that region's debt issues. So we'll see what happens on Sunday and see if that affects the markets. In terms of grain, we've spent 4 weeks going down, nowhere but down, and it just seems as though this week we went nowhere. Brock, can you give us just a little bit of a weekly wrap-up? What sort of changes did we see?
Oh, we did see a mixed bag of changes this week, Cody. We saw corn actually up about 10.5 cents. Seems to be finding some support and consolidating around that $6 area, that all-important area that we mentioned on actually yesterday's show. It's above the 100% retracement on the Fibonacci's, so it's looking kind of positive right now. But we are going to have some new news come out next week with the USDA supply and demand report coming out on the 12th. As far as beans are concerned, there's not a whole lot of new bullish news in the market there. Bears are firmly in the driver's seat, driving the market lower. So we're going to see yields actually going to be revised higher, I believe, next week on that October 12th report. As far as wheat's concerned, we do see December wheat for Chicago up slightly at about 1 3/4 positive this week. Kansas City wheat is actually tumbled this week, down about 18 1/4. So we're looking for, the reason for that tumble is that we have the news of some rains to be expected in the southern plains. So going along those lines, we've been talking about a drought down there all year long, it seems like. It continues to be a major concern, especially as we head into the planting season for hard red winter wheat. But Cody, really, how bad is it down in the southern plains?
It's really bad, Brock. It's actually very bad. If you take a look at the precipitation needed here to end the drought, we're looking at areas in the eastern part of Texas and the southern part of Oklahoma that need almost 20 inches of rain. They need rain, but they don't need it all at once, of course. We're looking at the kind of the fringe areas, southern part of Kansas, Oklahoma, parts of Texas, areas kind of in yellow here. Really, they need to reach between 8 and 10 inches of rain. Brock, I know that we have rain expected for the weekend. How much are you thinking?
Yeah, we're looking at about 1 to 4 inches of expected rain for those areas that you mentioned. Pretty widespread, but localized heavier storm cells are anticipated. So we could see upwards of 4 or 5 inches in some of those areas that you're looking for. For the rest of the country, it looks like it's going to be favorable harvest conditions. We have warm, dry forecast for the Midwest, so it looks like harvest is going to advance very rapidly, and we should see that pressure the markets next week as well, both in the futures and in the cash markets. So I'm looking at that. The weather being favorable is not necessarily favorable for prices right now. So
yeah, that's definitely going to put a little bit of a bearish note going in over the weekend and probably the early part of next week. We'll probably see some prices decline there in the wheat market. We're going to take a quick break, and when we're back, we're also going to talk about wheat and what other news came out in Europe that will be affecting prices down the line.
welcome back to the weekly wrap-up. Tony, let's continue with our wheat conversation that we were having earlier. What we're looking at here is our December CBOT wheat contract. And basically what we see is a classic definition of a downtrend. We have lower lows, lower highs. Basically, ever since our high that we hit on February 10th at 963, we have been selling off, consolidating a little bit on the way. But basically, the only thing that is supporting this market right now is the lows that we had last June 010, about in the 575 range. And really, corn is helping this market along, propping them up a little bit. But that market's continuing to tumble as well. What are your thoughts on this chart?
Yeah, I agree. Classic definition of a downtrend: lower lows, lower highs, and right now we're at the lower side of that channel. I would say that we could drop back to that 575-ish. We do have news out of Europe that's actually not going to be very helpful for prices. Wheat forecast was raised 28 million tons. That brings them up to 136.2. Really, this was a big result of France. People had very depressed yield forecasts for France just because of the drought that they were going through, and now looks like they're raising those a little bit. So that's good for wheat production. That's not so good for prices. That should weigh on the market. Another item here, really kind of a left hook to the wheat market, is the fact that Ukraine eliminated tariffs. So this is going to make weaker prices in the European market. Ukraine is going to be fiercely competitive, I believe, with Russian grain. And we know what happened when Russia came out and they lifted their export ban. They won every shipment, or almost every single shipment, to Egypt and for wheat. So the fact that Ukraine comes out, they eliminate tariffs. This is going to make them more competitive. It's going to continue to put downward pressure on prices over in Europe. I think it's mostly going to affect feed wheat. It's not so much going to affect the high quality wheat, because Ukraine really doesn't seem to have a whole lot of that. As long as they meet quality issues, this should continue to create a bearish situation in the market. The chart tells the story. We've seen bearish conditions for a while now.
Let's switch gears a little bit from the wheat market and let's go to corn. I know there's a quite unique situation forming for basis levels around the country as we head into harvest. Cody, we have an updated map for this week. Why don't you just give us a rundown of what's going on?
Yeah, take a look at corn basis. This is from last Friday to this. Of course, last Friday we had prices retreating significantly and closing very low and very weak. Now this week we seem to kind of gain a little traction down there. We've seen basis pick up in different parts of the country. This is another thing about basis, is that it's very regional, and you're going to want to keep track of how these these regions are changing, because you may be in the weak region, but you could travel just a little bit further. You could go maybe 180, 150 miles, maybe just 100 miles to reach that premium basis, and we have the tools to help you do that. So if you have any questions, I know we're going into harvest. You're going to want to keep an eye on basis levels, especially if you're selling right off the combine. We have the tools to really help you make extra thousands of dollars when it comes to cash sales. But back to the corn basis. We see stronger 6 to 10 basis point increases in Kansas, in Wichita, Hutchinson, Salina region. That's an important region. They tend to rail grain down to the Texas Gulf for export. So we also see stronger basis along the river, and that's once again an important part of the export market. I know that it seems like farmers are a little bit reluctant to sell at these prices after shedding so much. It's kind of forcing elevators out there to raise that basis, appreciate that basis, to draw that grain into their facilities.
Yeah, we know the export market did return to some decent levels this week. We saw exports for corn in particular actually increase significantly. I think it was about 64% over last week. So I think this is actually as a result of these increased exports, or maybe even anticipated exports in the next coming weeks, that these grain elevators near the river terminals, or even in eastern Kansas that move it down to the Gulf Coast, they're going to have to fill orders coming up in the next several months. So.
Yeah, I mean, one thing I just want to re-highlight this is it's incredible. Eastern part of South Dakota has fallen 1 to 3 cents, and you go just a little bit over into Minnesota, and you have situations where you're increasing 1 to 3 cents. So, I mean, that's 6 cents right there. If you're only following your local markets, you could be missing out on a lot of money come this harvest.
Yeah, make sure you grab a demo from us at grainhedge.com, and we'll be able to help you find these opportunities that are out there presenting themselves.
Absolutely. Well, you guys have a good weekend. Give us a call, 877-GRAIN-07. We'd be happy to hear from you.